Welcome to the BlockCrunch Podcast, the show for crypto natives. Every week, we do short but in-depth conversations with the most important builders and investors in crypto, so you can filter through what's noise and stay ahead of the markets. I'm your host, Jason Choi. Nothing on this show should be construed as financial advice, and my guests, myself, and my employer may hold positions in assets discussed on the show. This episode is also brought to you by Paraswap and Solana, two of my favorite projects in crypto. Stick around to learn more. Hey everybody, welcome back to another episode of the BlockCrunch Podcast. Now, if you're in crypto, you've likely heard about Arbitrum because it's one of the most important developments to come for Ethereum scaling and a project that I'm personally really excited about. And for context, Arbitrum is one of the two major teams building what's called optimistic rollups, and we're going to explain what that is. And they've been aggressively onboarding all of the major DeFi projects on Ethereum to bring you a faster and cheaper experience. So naturally, I'm really curious to understand how they've done this, what are the trade-offs they make, how they compare with other major projects, and how they intend to win the market. And just as a disclaimer, Spartan is an investor in Off-Chain Labs as well, the company behind Arbitrum. So to answer these questions today, I'm really excited to be joined by Steven and AJ from Off-Chain Labs. So welcome to the show, guys.
Hey, thanks for having us. Great to be here.
Thanks for having us.
Awesome. So I'm super excited for this. And I know this is a super complex topic and we have limited time. So I'd love to just kind of jump right into it. So for people who are, following the Ethereum space, just a few years ago, all of the community was talking about state channels, side chains and plasma. And all of those people seem to be talking about optimistic rollups today. So can you help us understand, why all the attention seems to be shifted to this new thing and what is it exactly?
Yeah, definitely. And it's funny you mention state channels and plasma because I remember when we were raising our seed round back in 2018 and we were talking to investors, we said, hey, we have a scaling solution. And everyone would say, oh, are you state channels or are you plasma? And we'd be like, no, we're kind of this other thing. We'd be like, no, state channels or plasma. So eventually we just rolled with it. We said, I guess, we're kind of a state channel-ish thing. And then, fast forward, the roll-up really category emerged and we fit really well into that category. We found a home for Arbitrum and a way to describe what we're doing. But I think if you look back, everything rollups aren't fundamentally, a new thing that came out of nowhere. It's really learning from previous attempts and understanding why some things worked and some things didn't work. And I think, in Plasma's example, for example, it was a much more ambitious task, Plasma, really. The goal of Plasma was to get transaction fees actually much cheaper than rollups because it was not only scaling the execution, but also taking the data off-chain. Rollups is in some sense a simpler model and said, hey, let's put all the data on-chain. So get rid of all these data availability attacks and problems, and let's just try to scale, what's left. And I think as time played out, obviously there were successful plasma implementations, but not really for smart contracts. So as time played out, I think as DeFi built up and the DeFi summer happened, and people really came to really appreciate the importance of composability and smart contracts in the composable ecosystem. Rollups became an increasingly attractive option, and lots of teams, including us, have been really building out that vision.
That's awesome. And I'd love to kind of dive into how it works as well. So at a high level, how does Arbitrum actually work? Because I understand there are transaction processors and there are people who monitor the transactions to submit these fraud proofs. So how does that whole process work for, say, a transaction going through and someone challenging the transaction to that challenge kind of going through?
Yeah, great question. And, in a traditional, in the expected case, challenges won't really come up. So what happens is a user will post a transaction, and actually the bits of that transaction will get posted to the Ethereum chain. They'll be aggregated and posted to the Ethereum chain. But whereas, you can view a transaction kind of as logically two parts. There's the actual bits and data that the transaction carries, and then there's the instructions that says execute this, store this. And in a rollup, the actual data, the call data, the bits of the transaction get posted on Ethereum, but the results of that, the execution and the building up the state, don't happen on Ethereum, happen in layer 2. The way Arbitrum works is optimistically, and that's we're an optimistic rollup. So actually step back for a second. So what you want though, so you're not doing the execution on Ethereum, but the thing you want is you want Ethereum to vouch for the correctness, and Ethereum to say, hey, what happened in layer 2 is correct. So at a very high level, then you want to prove to Ethereum that, hey, this is what happened in layer 2 and it's correct. And the way optimistic rollups do this is there's the layer 2 validators do the execution, and they go ahead and say, hey, we executed these transactions that were posted on Ethereum, we executed them, and this is the result that we got. Here's an image, a hash of the resulting state. And this is posted optimistically without proof, but then someone can say, hey, I disagree, and offer a fraud proof and say, I will show you that this is incorrect. And in Arbitrum, there's an interactive process that mediates this dispute. But that's like focusing really on the case that won't really happen. And the reason is fraud is disincentivized in the system because a bad actor will lose a lot of money. And again, security doesn't depend on game theory or economics. Security, the correctness assumption is as long as there's one honest person in the system, they will be able to guarantee correctness. But if there's a dishonest person, they're going to have to pay a lot for doing the wrong thing. So wrapping this all up, then a user posts a transaction, the validators execute these and report to Ethereum and say, hey, this is the state. And in the expected case, a time window opens where anyone can post a fraud proof, and if it's correct, no one will post a fraud proof, and then Ethereum will accept this as being correct. If it's incorrect during that time period, someone will challenge that, and Ethereum will mediate this dispute and guarantee that the correct outcome is what's verified, and any fraud is removed from the system.
Yeah, I love that explanation of how Arbitrum assumes that your transactions are valid or are correct before proven otherwise. That's where the word kind of optimism comes from, or optimistic comes from. And kind of on this point about validators who are processing transactions and people who are challenging these transactions, who can operate in these capacities? Is it miners, or is it anyone with a laptop, or what types of people are doing these?
Yeah, really. I mean, today our system is not fully open to the public. We'll be progressively opening it beginning later this month, but I'll talk about the system as it will, as it will exist when it's fully open. And the answer is this is a permissionless role. So anyone can serve as a validator. So it's not miners. It's really anyone. It's like running an Ethereum node, basically, or it's running an Arbitrum node, which allows you to execute the transactions and verify that what validators are posting on chain is correct. And now anyone can do this. And anyone can also offer a challenge. The only thing you'll need to do to offer a challenge or to post an update is a deposit on hand. Because remember, I said before that if you commit fraud, you'll lose some money. So whenever you want to actually post something and say, hey, I challenge this, or hey, this is the updated state, you'll have to put down a deposit. But really, other than that, anyone can run these, and there's no whitelist or requirements to do so.
Absolutely. And I'd love to understand now, zooming out, the implications of Arbitrum and some of the design choices made there as well. Because I remember earlier this year, I read this really startling statistic that I think almost 50% of the gas on Ethereum was used by Uniswap at one point. Now that Uniswap is launching on Arbitrum, if the gas paid by users is drastically reduced because of Arbitrum, this obviously impacts the revenue that miners can receive as well as a result of fees. So I'm curious, would something like Arbitrum or any layer 2 actually disincentivize miners from validating the network because it reduces the fees they could receive?
Yeah, great question. So the way that I view things, and of course, there's complex modeling here, and no one really knows exactly what will happen as rollups release some of the pressure in Ethereum. But the way, at least that I view it, is there's so much demand right now for Ethereum capacity. Just a few months ago, when the gas limit was raised to 15 million, you saw basically there was like a vertical line on the use rate. The demand is there, and users are waiting to fill that demand. And there's much more demand than there is capacity. So the way I view this is we'll take traffic off of Ethereum, but I don't view there being empty blocks because of that. I think that there is, we'll basically add to the capacity, at least in the short run. In the long run, I think this will be the same as well, where I think we'll move to a future. And this is not, immediate, but over time, where more and more traffic is moving onto rollups, and Ethereum will largely become a layer where the data for rollups is posted. But at least in the way I view the market going, this is likely, at least in the long run, going to, I think, saturate Ethereum. Even with a little bit of traffic, a little bit of data you have to put in Ethereum, I think we'll see a future where that's basically that can count. Ethereum can be full, miners will have their incentives, and we're just basically multiplying the effects of using Ethereum at capacity. Will there be like short term lulls, and as this goes on, as it happens? It could be. I don't really, have the model fully built out in my head, but at least, I think long term we're upwards and to the right. Right, the Ethereum traffic is, I think, going to, demand's not going down; it's going up, and rollups will relieve that pressure and continue to relieve that pressure. But and I don't think we're going to long term see Ethereum being empty. I think we're still going to see Ethereum being better utilizing the space available on Ethereum to support rollups, so we can both, really, really compress what we're doing on the base layer, still use the capacity, but in a much more compressed way, and able to get a lot more bang for our buck.
One thing to add there, just maybe to make this a little bit clearer, is that rollups compete for layer one block space with transactions that are done on layer one. So, unless there was like 100% migration immediately, from a layer one to layer two environment, we'd be in a competitive environment, which would probably keep the gas prices high, making the miners happy. And then over time, you'll see a migration to layer two, in which event, probably the miners will have the same revenue overall, but revenue per transaction probably will go down because there's batches of transactions on layer two.
Got it. Yeah, that makes a lot of sense. Thank you for that clarification, AJ. And speaking of Uniswap, there are so many other applications that have signed up to build on Arbitrum as well. I think there's over 250 teams now, the last time I checked. So I'm curious, how does Arbitrum impact composability for dApps? Because say if I want to take out a loan from MakerDAO today, which could be on one rollup, and then take into Uniswap, which could be on another rollup, is my experience impacted versus layer one, and how can some of those trade-offs be mitigated?
So the way to view Arbitrum and really any rollup is basically as its own ecosystem, kind of like its own blockchain. Again, we're built on Ethereum. We're part of Ethereum in a very real way. Like the data goes on Ethereum, and we're paying for Ethereum security. But in terms of the composability, it's really a separate chain. And what that means is between two rollups, or between Ethereum layer one and a rollup, you won't have the composable, synchronous calls. But within the rollup, for two apps that are live on Arbitrum, you will have the same synchronous calls and composability that you expect in Ethereum. So, and that's why, the way we're approaching this is really trying to move everyone at the same time, and why that's so important. Because again, DeFi is about composability. It's about the ecosystem. Having one or two or three apps in a silo is a lot less useful than really having the entire ecosystem. Because as you said, you might want to do something with, Aave and Uniswap in the same transaction, and so Aave and Uniswap will be, those are and it's a good example because they'll be live on Arbitrum in very early days, and really, but yes, you won't be able to use Aave and Ethereum synchronously with Uniswap on Arbitrum, but you will be able to use the Arbitrum versions, the Arbitrum Aave and Arbitrum Uniswap together, just as you would in Ethereum.
So is it going to be a situation where you have maybe one DeFi rollup, and then all of the DeFi apps are on that rollup, and then there's one NFT rollup, and then all of the apps in that rollup? Or is it kind of one app, one rollup type of situation?
Yeah, I think it's really the former. Obviously, it's still a competitive space, so I don't think we'll see one DeFi roll up right now. I think there's going to be, of course, competition here, but at least in terms of how we think about it at Arbitrum, we're going to have the DeFi chain in which all of the DeFi projects that want to be synchronously interacting with one another are going to be launching. And for right now, we're basically launching one public chain. We're calling it Arbitrum One. And it's a mostly DeFi projects, but I think long term, it's what you said. There will probably be different rollup chains specialized for different use cases, and really built around almost like self-sharding. Projects will organize around who they want to be co-resident with, who they need to compose with, who their users will want to use, synchronously. Which projects and those will end up on a single rollup. I think this is really a long term, how the market will, how the ecosystem will develop. But for now, we're really going heavily on one rollup chain, and that's where all these DeFi projects will be launching all on the same chain. So you'll have really the synchronous, composable ecosystem that users love on Ethereum will exist on Arbitrum as well.
I think, though, Jason, that you make a good point, because we're starting to see the beginning of that, where Reddit is going to be using Arbitrum technology for their rollup. and they've chosen to sort of go with a separate chain from the beginning, sort of be in a siloed environment. So I think that's the beginning, sort of how this might play out with multiple rollups across different verticals. It's going to be interesting to see how it plays out.
Yeah, that's actually really interesting. How did that happen? Actually, the partnership with Reddit.
Yeah, so it's really what it looked like. We submitted a proposal to the Bake Off like everyone else,
Yeah.
and a few weeks later, we received an email, and we engaged with their team. And over the next several months, we continued engaging with fantastic team that they have at Reddit, really doing amazing things. And over time, we got closer with their team, and they were testing our technology, and then. It got to a point where they had basically chosen to use Arbitrum, and we were very, very happy to support them, of course. But it really started from the Bake Off submission that we did and submitted it. It was basically a year till between when the Bake Off submissions happened and when the announcement happened, and we submitted our proposal and waited, and we then got to know their team quite well and work closely with them.
That's awesome. That's really exciting. I can't wait to see what that looks like. And as Steven, you also mentioned just now this point about sharding, and this is a question that some of the listeners have as well, which is, once Ethereum updates to 2.0 with its own sharding, is there as dire a need for optimistic rollups as it is today, or do you kind of see Ethereum 2.0 and Arbitrum still being compatible?
Yeah, I view Arbitrum and Ethereum 2.0 as very compatible, and I don't view them as really competitive at all. And the reason is, and actually, Vitalik had a really great post almost a year ago now about ETH2's roll-up centric roadmap, and anyone who hasn't read that definitely should. And the way the basic idea, at least the way I understood it and the way I think about it, is the ETH2 will scale data. Obviously, ETH2 has multiple phases, but the phase that seems most likely to happen soon, and the one that really has clear development paths, is to scale the data layer. And the way to think about rollups is rollups are really multipliers, right? So if you give me more data, we will increase what you can do with that data. So, and again, back to my initial point, we don't see the need. We don't think that Ethereum demand is tapering off anytime soon. So I think we're going to basically need a lot more data availability, and we're going to need to scale the execution with that. Of course, ETH2 does, at least in the in the full formulation, ETH2 does have a scaling execution phase. But I think at least a lot of people are beginning to think that ETH2 will really scale data, and rollups will be the execution layer. So ETH2 vision is rollup centric, meaning it's the combination of the ETH2 for data scaling and more data, and rollups for scaling execution that will be the basically the end game of Ethereum scaling.
Got it. That makes a lot of sense. And I'd love to kind of shift gears a little bit to talk about the competition as well, because I'd definitely be remiss if I don't talk about all of these other efforts out there. But before we dive into the specific, first, generally, how important is first mover's advantage when it comes to deploying L2 scaling solutions, right? Can a project that's deployed on Arbitrum also deploy on Optimism or deploy all these other scaling solutions, or how is that process actually managed when you talk to these projects?
Yeah, it's a great question, and I think a lot of projects now are taking the multi chain approach, where they're obviously there are both. There are projects that are focusing their exclusively on one chain, like we have projects that are really focusing on Arbitrum. Then there are projects that are deploying on Optimism, Arbitrum, Polygon. So there are both, and each team has sort of their own strategy. From our perspective, we welcome everyone. We never ask for exclusivity, right? And we don't expect that. We think that users will obviously do like Arbitrum, will provide a great experience, and we think that that's going to ultimately be very important. And the thing about Arbitrum is that differentiates it from some other rollup products is the ease of development. We're EVM compatible on the bytecode level, so you can take your code that you wrote for Ethereum, and it'll more or less just work on Arbitrum. And that's there rollups really run the gamut from there are rollups that have their own languages and rollups that are more compatible with EVM than others, but I think are at the extreme of compatibility. And I think that's very important because, again, it's about building the ecosystem. I think even more important than first mover effect is really about building the ecosystem and getting the projects on board that that users want to interact with. So we're just focusing on trying to get great projects working with us, and if they want to work with other teams as well, that's absolutely their prerogative to do. And we have no
hard feelings.
No hard feelings at all. We just want to support people in Arbitrum and support them in their vision and how they want to go. And if that's a multi-chain vision, they have our blessing to do that, of course.
Now, before I continue, I'd love to share one of my favorite products in crypto with you. Now, whenever I want to trade a token, instead of going to Uniswap, SushiSwap, Bancor one by one to see where I can find the best quote, I just go to Paraswap to scan for the best price anywhere. Because Paraswap aggregates all the popular Ethereum dexes and saves me a ton of time and headache in finding where I can trade something for the best price, and lets me trade in one place. Now, the cool thing is they've also integrated with Ledger Live as well, meaning I can now swap at the best prices directly from my Ledger wallet. So seriously, if you're a DeFi trader and you're worried about the security risks of centralized exchanges, but you also don't want to scour dozens of dexes just to find the best price, you have to check out Paraswap. So head on over to paraswap.io/blockcrunch. I'd love to also talk about our sponsor, Solana, a high-throughput Layer 1 blockchain. Now, in the past few months, I've probably talked to 24 teams building exciting new projects on Solana, and this is probably why. First, it's incredibly fast with 50,000 transactions per second. Second, it's cheap, with average fees less than a cent per transaction. That means developers can deploy contracts cheaply and also not have to worry about their apps not being composable with others, as Solana does not use any type of sharding or fragmented Layer 2 systems. Most importantly, Solana is censorship resistant, with over 950 validators today. So if you're interested in building fast, scalable blockchain applications or want to test out the existing ecosystem of DeFi applications and more, go to solana.com/blockcrunch. That's awesome. And speaking of other chains, obviously this year we saw a lot of people kind of moving to things like Polygon, which provided users with kind of cheaper experiences with DeFi, and there are some security trade-offs with the bridges and so on. But I guess the question that some listeners might have, especially if they're not as deep into the technical weeds, is, if Polygon exists, right? If it already works, there's billions of dollars on it, why do we still need to explore optimistic rollups?
Yeah, it's a great question, and we're actually I'm personally quite close with a lot of the Polygon team, and a lot of respect for them. It's basically a different point in the trade-off, right? So what rollups provide you is the security is derived from Ethereum. So if you rely on Ethereum security and assume that Ethereum works and Ethereum is secure, and in the case of optimistic rollups, you assume that there's just anyone at all that's an honest actor in the world, then you get your security. So a very a security assumption that's really very closely tied to Ethereum and derived from Ethereum. In the Polygon case, it's interesting. So Matic is their current chain that's a side chain, so it doesn't really derive that security from Ethereum. But again, there are trade-offs, right? Arbitrum will never be as cheap as Matic for transactions, because we are paying for Ethereum on a per transaction way. There is a linear cost, right? Arbitrum transactions are going on Ethereum, so we pay for that security. So it really depends on the application, but we're never going to be able to get the quite as cheap, because we are paying for the Ethereum security. But I think even in Polygon's view, I think they understand that there's a good trade-off to be made by paying a bit higher transaction fees and paying and getting Ethereum security. And I don't know, I'm sure you're aware, they recently did announce a merger with Hermes, I probably mispronounced that, the ZK-rollup project. So I think they're executing on this vision as well, and really believe. So that's what I would tell a user who asked that. Just even the Polygon team is focusing heavily on rollups, because Ethereum security, I think, is very, very important, and we value it very highly. And I think ultimately, there's a large class of users that prefer that. And again, when you come to a composable ecosystem, if there are a bunch of users that want Ethereum security and a bunch of users that are agnostic, you have to look for the common denominator. So where's the place that everyone can come together? Because that's where the power of the ecosystem happens. And I think as Arbitrum is an optimistic rollup that gives you low transaction fees, maybe not quite as low as Matic, but low transaction fees and the security derived from Ethereum, that's really a great place where many users can come together and sort of the common denominator, and helps build an ecosystem that everybody can get around.
This could also be something sort of that ends up depending on verticals, right? Like there are some verticals, obviously, financial products, which are more sensitive to security than, there could be, games that don't have, significant economic incentives that are fundamentally, sort of, less focused on security and more focused on sort of, a cheap user experience. So there's going to be trade-offs, across the gamut, I think, even after the significant rollup adoption. They're just in many ways like parallel technologies.
Absolutely, I hear you on that. And for this next question, I had so many different ways in my head that I wanted to ask this just because it's such a huge question, but I decided the best way is just to make it as general as possible and let you guys, the experts, take it wherever you want. So one of the competitors for Arbitrum is Optimism, which is also doing optimistic rollups. So I would, dive into the dispute process and how they differ, but just at a high level first, what are the differences between the two projects?
Yeah, a great question. And I think so. There are obviously a lot of ways to take this question, and I think on a technical level, we can talk about disputes, which is what you mentioned, and that's the most, sort of the first place of where the difference happens. But then, of course, it has effects throughout the stack, but let's start there. So we mentioned this idea of fraud proofs that you can basically post a transaction and then you post your transactions. A validator goes ahead and says, "Hey, this is the state." Post it optimistically, and then if someone else disagrees, they can post a fraud proof. So then the question is, let's go one level deeper. What is a fraud proof? Like, what does that actually look like? And that's one place where we have probably our most notable difference, which is in their case. The fraud proof happens on a per transaction basis. You say, "Hey, that transaction is fraud," and they go ahead and run that transaction on chain. In our case, we don't ever actually run whole transactions on chain. Instead, an interactive process happens in which, and we don't even have the per transaction dispute. You can just dispute a whole, basically, our dispute. The unit of dispute can be much larger. You say, "Hey, I disagree with that. Something went wrong here." Then an interactive process happens between the challenger and the one who made the original claim. We call them the asserter. And they get to via an interactive process, they get to the single step of disagreement. And the way that works is, for those who have a computer science background, it's like a binary search. And the idea is you say, "Hey, we all agreed on step 0, but somehow in step 100, we've diverged. So let's go back to step 50 and say, hey, do we agree here or not?" And then you say, okay, if we do agree, let's look at the right half. And if we disagree, then something went wrong previously in the left half. And you do this logarithmic many times. And I'm describing the protocol in very simple terms. In practice, it's much more heavily optimized. The idea is you can get to one very basic unit, one step of the virtual machine. And that's where and all you need to run on chain now is that. So that's, sort of, it's ironic because you may say, hey, Steven, you just told me a few minutes ago that disputes will never come up. So your only difference is disputes. Like that's pretty, but this doesn't matter in practice. But it's funny because disputes actually affect the non-dispute running of the system as well. Even the happy case is affected by disputes. And I'll give you an example. One question is, so how big can your transactions be? Well, if you're in a regime where you need to actually run the transactions on chain, you're still on a per transaction basis, bound by the limits of Ethereum. You can't, your unit of dispute, which, assuming it's a transaction, your transactions can't be larger than what Ethereum allows in a single block, because then you won't be able to dispute that transaction, right? You can't have a transaction that, say, uses more gas than an Ethereum block because it's not disputable. And you might say, but disputes won't come up. But sure, even if disputes don't come up, you need to have the ability to dispute. You can't have a transaction that's not disputable. In our case, though, those two things aren't connected at all. You have a transaction you can have a transaction that uses, more data than in an Ethereum block. And because you don't ever need to run that transaction on chain, you just sort of get down to the smallest unit of dispute. Basically, it gives you really a way to do larger transactions and not be limited by Ethereum. But I'll say this, which is, I think this is like our most, I would say, fundamental difference. And again, we have a lot of differences that stem from there. But ultimately, I think their team is a really great team, and they're building out a lot of respect for what they're doing. And one of the benefits, and they'll tell you what they're doing is It's a lot, they get to reuse some components of Ethereum that we had to basically build from scratch. So definitely, two different approaches, and a lot of respect for what they're doing. We also have differences in our sequencer model. So a sequencer is sort of the one who posts transactions on chain, in the most common case. And what the sequencer can do is give you faster responses than you would otherwise get. So give you sub block time responses, which means it gives you responses even before your transactions on chain. Obviously, it won't have the security of having your transaction on chain, but sort of there's this model where the sequencer basically tells you the result of your transaction immediately. And then the question is, who runs the sequencer? And the sequencer has this ability to front run. If the sequencer is controlling the ordering of transactions, it can extract MEV, or minor extractable value. And so who runs that? So I think in our current state, we're very similar to them. We'll be, both be running the sequencer, but our ultimate goal, is to decentralize the sequencer via what's known as a fair ordering protocol, or a fair ordering consensus. And the idea is to decentralize and distribute the sequencer this way by having many, many nodes run the sequencer and come to an agreement of the ordering of transactions in a way that a single node or a minority of the nodes wouldn't be able to change the ordering or reorder transactions. They have a different system about which involves auctioning off the right to be the sequencer, and that's how they talk about distributing the sequencer, MIVA or MEV auction. So auctioning off the right to be the sequencer, and the reason why we dislike that is because it really incentivizes the highest bidder, the one who will extract the most MEV, to pay to be the sequencer, right? So if there's $1 million of MEV to be extracted, the one who will extract that, the one who will do the most damage, will be the one that will pay the highest in that auction. And that's why we shy away from that model. But ultimately, this is really a philosophical debate. There are many, many different approaches here. Obviously, I can go on for hours of why we appreciate, we like our approach, but ultimately, I think there's really lots of good technical merits and discussions here, and we take different approaches. But I think they're taking, they have obviously a great team and doing great work there as well.
Absolutely. And in a situation where, I'm sure you've had this conversation so many times already, say, a developer or a project approaches you guys and say, hey, we're thinking of either deploying an Arbitrum or Optimism, how do you try to sway them one way or the other?
We really don't, to be honest. We don't try. We try to put our best foot forward and really show people the merits of building an Arbitrum. But never have I tried to convince someone not to. If they want to deploy a multi-chain strategy, I definitely don't try to convince people out of that. We think that their users will have a fantastic experience in Arbitrum, and basically, we're not in the world of we're not very aggressive in our pitch. We try to show users the merit. We give, I think, pretty great customer support, helping users, helping dev teams when they need, giving them access to our engineers, answering their questions as much as we can. But that's how we basically go about that.
Yeah, that makes a lot of sense. And you also mentioned earlier, you referenced the idea of kind of ZK-rollups. So I definitely want to touch on that as well, because there's been a lot of rhetoric around how ZK-rollups is the end game for scaling. So first, do you agree with that statement? And second, are there certain things that optimistic rollups can do that maybe ZK-rollups cannot do?
Yeah, it's a great question. So I don't necessarily agree with that statement. What I'll say is this, and this is true for rollups in general, that in 5 years from now, pick your favorite rollup project. The technology of today will look primitive because it always does. That's how technology evolves, especially in a space with this much attention. So we need to keep evolving and keep improving. And I think that's important. I don't necessarily. So will there be will there be improvements to be made on the protocols today? Absolutely. Is Arbitrum as it exists today the final best thing ever? No, of course we'll improve it over time. But I don't really agree with this vision of ZK rollups are the obvious end game. And there's a few reasons for that. To your second question, are there things that optimistic rollups do better? And one thing that we do that at least ZK rollups aren't doing right now, is we post data to chain very, very frequently. So remember, there's a sequencer that gives sub blockchain times. Remember, you're not really getting, until the data is locked on chain, you're not really getting a guarantee. Your transaction, for example, if the sequencer is just holding your transaction but only posts to chain every few hours, then you don't really have a guarantee that your transaction is included until that few hours are up and it posts on chain. But the sequencer can reorder your transaction or just completely censor it, even if it told you it won't. So what we do is we post transactions on chain very, very frequently. And I know at least some of the ZK projects talk about this as a feature that they're able to only post aggregate data and remove intermediate steps. So for example, there was a post by I think Starkware about how they were able to condense lots of Oracle updates during a period of volatility. But in our view, and that is a benefit that ZK has. It's a benefit that they have. They can condense in a specific way. We also, of course, compress data. But the idea is, at least in our view, in a period of volatility, what I want is my transaction on chain quickly, right? I don't want, of course, if you're only posting one data on chain at the end of a 3-hour period, even if you condensing that point is nice, but it also means that during that 3-hour period, there were no checkpoints. So at the end of that 3-hour period, the sequencer could have chosen, or the operator in their case could have chosen not to post all their transactions on chain. So I think there are some benefits of our approach. But ultimately, like I said, the way we approach this is we think we have a really great scaling solution that's available today, and we'll continue to iterate and upgrade it as technology evolves. But I don't really necessarily subscribe to this idea that ZK rollups are the obvious endgame.
Got it. Yeah, thank you so much for that clear explanation. And I'd love to take a step out of, looking at the competitive landscape and really look at what's next for Arbitrum and what's next for Off-Chain Labs. I think there's over 250 teams now that's interested in building an Arbitrum. So what is the onboarding process usually like? Like, how do you find these teams, and how fast does it take for you guys to help them onboard? Or is it kind of I guess self-serve type of model where they kind of build the integration themselves?
Yeah, so with the majority of teams, one of the beautiful things about the EVM compatibility at the bytecode level is that if your contracts work on Ethereum, for the most part, you're able to simply deploy them on Arbitrum. There are some examples where that's not the case, where we have like gas accounting is a little bit different in Arbitrum compared to Ethereum. For the most part, it's the same. So we have the same sort of questions that come up over and over again from developers. We try to give as much developer support as we can. But yeah, we're there for the developers, but usually they have the ability to sort of get up and running on their own. Oftentimes we hear from projects that they've been able to get up and running in basically a 12-hour turnaround from the beginning to end, getting up and running. Obviously, like the front end is different, sort of integrating, the UI and stuff like that. But contract deployment and sort of testing, it's usually a pretty smooth process, and we try to do our best to help where we can if there's anything that comes up.
And AJ, would you say that's the unique edge that Arbitrum has, kind of the speed of integration because of this EVM compatibility?
Yeah, we get that feedback a lot from developers, that it's a pretty smooth development experience. And, especially as projects are thinking about like multi-chain deployments, I think they're moving more quickly into thinking about, like with Polygon and Binance Smart Chain, Optimism, Arbitrum, the UI questions are becoming something that they're addressing already. So I think like that process of integration of new chains is accelerating. So the contract deployments is a crucial component, but it's also sort of, how to have end users interact with the system in a multi-chain world. But I think, especially with the way that Binance Smart Chain and Polygon have taken off over the last 6 months or so, a lot of those questions have been the top of mind of developers already. So I think that's also accelerated adoption within the Arbitrum ecosystem as well.
Got it. And speaking of user experience, when can users expect to kind of test that Arbitrum 1 or some of the applications on top of Arbitrum?
Yeah, so we are planning on going live quite soon. We put out a post maybe a week or two ago, that we plan on opening up to users at the end of the month. So that is when users will be able to actually get their taste of this. Of course, as we mentioned in that post, we'll sort of be easing into this period, and we'll talk more about that. but fundamentally, that will be the first time your average user, I should say. Of course, there are developers that have been on for quite a bit now, but that's the first time that your average user will be able to come and play in this theme park.
Yeah, absolutely. I'm super excited for that. And I think on that note, just to wrap us up, if people want to stay up to date with Arbitrum and understand, what are the projects they can use, what are the best resources for them to do that today?
Yeah, so we put out last week the Arbitrum One portal, and that's portal.arbitrum.one, O-N-E. And that's where you can see the projects that are going live in Arbitrum in these early days, and we'll continue to add projects there as we become aware of them and as they do their deployments and are ready. So I would say from a what can I do in Arbitrum, who will be live and who is live once we launch on Arbitrum, the portal is probably the best resource. We have our developer docs as well, which is a great resource for developers. We have a great technical document called Inside Arbitrum, which will give users really a look under the hood as to how all this works and those ideas. What we talked earlier about how our fraud proofs work, and you'll get a lot more detail on that, but I think in a pretty accessible way. So your more technical minded listeners may be interested in that as well. And of course, our Twitter account is a great place to follow for updates, and our Discord is a really active community where users can come and ask questions of any sort and hopefully get good answers too.
Awesome. Well, once again, thank you so much for coming on the show, guys. This has been really fun.
Yes, great. Thanks so much for having us.